Taking a look at the interest rate markets today, I want to focus on the two-year note today. A little shorter end of the duration curve, and we're seeing, again, strong bids in the two-year today. We're seeing the two-year rally, yields being pushed down. When you look at the markets in general, we're seeing a rally across all the different durations. Really, when you look at the twos all the way out to the 30s, strong buying across the board. We're seeing the two-year note right around the 107.26.4 level right now. So again, we're seeing it bid up. We're seeing it up actually 6 out of the last 7 trading days. We are seeing the two-year rallying on 6 out of those last 7 days. And some of this upward trajectory, I think when you look at the yields now, I want to point out that the yield's been pushed back down to that 1.615 level, 1.615 on the two-year yield. So back down to the middle end of the range here. So again, we're continuing to see volatility within the bond market space as the markets try to dissect some of the news items coming out. And when you look at the 2-10 spread right now, that 2-year versus 10-year spread, it's holding right around 3 basis points. So we are seeing the 10s and the 2s and the 5s for that matter coming all down together today as far as the yields. Looking at the data, I think that's the driving factor today. Very weak consumer confidence number coming out today from the U.S., and we did see bond markets rally after that number came out this morning. And so if that trend continues, I think that's another possible catalyst here for seeing the bond market continuing to hold up. Couple that with the weakness in the factory orders coming out of Europe yesterday, and now a third item the market has to contend with today is the potential for impeachment proceedings against President Trump. All those factors are being incorporated into the pricing, I think, today, while we're seeing this risk-off mentality. We're seeing the bond market rally, the equity market sell off. Also, we had a two-year auction today. $40 billion was auctioned off today at a yield of 1.61. So again, we're seeing it very similar. It's a little higher than the most recent two-year auction, but still nonetheless strong demand for those two-year notes, particularly overseas demand. Indirect demand was much stronger than it has been in about a year and a half.